All right, let's jump into things. It is 8th of February, so 10 to 3 on the Sunday Arvo. So do a bit of the weekend wrap. So a chance to have a look at a few of the charts, sort of see how things sort of finished up for the week. Obviously gives us a bit of a plan and an idea of any sort of potential trades sort of coming out this week and where we can use sort of confirmations and basically get an idea of the lay of the land to sort of see what we're going to hopefully be expecting sort of come through this week. But I'll start off with silver because look, metals as a whole have really sort of been the place to be in the last sort of week and a bit and that. But gold of course, but silver seems to be taking a little bit more of a beating than gold has been. So as I said, look, I'll start off with silver here, but I mean just to get an idea of the kind of sort of movements here. Like I was saying back last week on this sort of weekend wrap that I wouldn't be surprised with $10 days sort of coming through this period here. And dude, it has been just insane. Like, I mean, if we look at this is I actually did this a few moments ago, but like this is around, I think, 20% or something. That is a 22% bounce, thereabouts, whatever, from, $14 from Friday's low to where pretty much where it closed on the highs or just off the highs. That's insane, and I mean that's also on the back of dropping. Where was the Friday session? Roughly around here, whatever. After dropping 13%, dropping $9. I mean, it's funny. I had one of these sort of like 1 year memories come up, and so we're talking 12 months ago. Silver was around $30 or something like this, and it was a trade that I'd taken, and I was like, yeah, well, I'll break out bomb, and it gone like say 30 cents or something like this, which at $30 is a 1% move in one candle. So 1% in one candle, not too bad, but of course, it does that does three times that, five times that, just as a back test before continuation at the moment. So, it's definitely a different world that we're kind of trading in at the moment. And that's the thing. I think a lot of the times you got to be like prepared for this kind of stuff and sort of know how to adapt sooner rather than later. Because obviously, moving so quickly, your position sizes need to come down a little bit, just to sort of protect you on the downside. Sort of when these things flick back the other way, or if you get caught on the wrong side of it. Like it's all very well to sort of go, say, 22%, and if I had X amount on my position size, I'd be making X amount, whatever. But again, like I think what people sort of say with this stuff is, don't worry about the money you're making, worry about the money that you could potentially lose. And I can attest to that because I've taken some big hits and shit. And you know what? One thing that I have sort of realized is that you need to reduce your position sizes because if you do get these things wrong, it could be quite drastic very quickly. And I always sort of liken it to typically trading like, say, Aussie against USD, of course, Aussie against sort of like GJ, the pound against the yen. So, like, when you first started out, you're trading this, you're trading that, and all different things. You're working out what works for you, what market you want to trade, and all this kind of thing. And, yen pairs, apart from the fact that they're super weak, and we all know that, but yen pairs particularly GJ, just moves so quickly. And so, like, I would notice sort of like trading the Aussie and then sort of trading GJ, you just can't trade the same lot size. You need to reduce it down. And it's fine because it moves faster, you can still get the same return on things, but you just need to understand that sort of these things can really flick around, move very quickly. And that's what I'm basically, through all this dribble, getting to with silver where we're at today. Because, as I said, like, a year ago, you're moving 1% and you're like, hey, check it out, boom. It's this week particularly. Look, this isn't the norm. This is just, this intense period of volatility. But still, 22% in a day, you know what I mean? We had that big sell down back here. I say back here, it was like a week and a bit ago, and that was 15%. And everyone's like, wow, check it out. But, when you're dropping 40% in a week or whatever, or sorry, actually it wasn't even a week, in a couple of days, you gotta you gotta cover yourself on the downside as well, is basically what I'm getting to. Anyway, look, let's get into it. So a couple of things that are sort of going back and forth with silver here. We did have this sort of like retracement to the 38%. We did continue down, and then we, as you can see, this is on the lower time frame on a 1 hour, we pushed down mid 60s, and then sort of, obviously quite a sharp bounce back, as I said, 22% bounce off the lows there. Now, the question for us at the moment is that it? Because if you have a look on the daily, That's quite a strong bounce back. And remember, this is the line that we sort of put in at 70, said this is going to be a bit of a support area. The fact that obviously it sort of closed down on its lows here, continued down, but that's quite a strong reversal. So you got to sort of think, okay, well, you can't just ignore that bounce. Let's just do a little bit of work as well. We'll put this in here because there's a bit of a zone here on the daily. Oops. So as a daily and that it's sort of come back up, you could say, okay, it's retesting this downside here. So I'd say maybe back up clear of this zone here. So a clear of, close daily above, say 80, should be able to open it up to 84. There's another zone up here. And obviously we're building up with the dailies and then we can sort of work our way down. But the question is this bounce legitimate? Is it going to come back up here? Is this a rejection and a trap of the shorts, and then we're going to go back up over the top over here? I tend to sort of think no. To be honest, I think this is probably just a little bit more of a short squeeze because a lot of people would have been looking at these levels here. A lot of people would be short from these levels through here. That we obviously sort of took that stuff out. And although we had this one little pushback here, these kind of candles, how it's moving up like this, to me, sort of feel possibly short squeeze-ish, because so many people would have been getting short down here, taking out those lows from that initial big drop down. Okay, that's cool. Lower low. Textbook says I get short here now, yeah? So what do? I put my short entries here. I put my stop above, maybe above the high of that candle, the high of this candle, high of those candles, these kind of areas, because that's what the textbook says. And then what do? They just push it up and up and up and up and up. And so it makes me sort of think that, this is kind of just squeezing out these people, that the actual sort of overall structure of the bear flag with the retracement from the 38% will still play out. And of course, the price target on that is low 40s. So still quite a way off. But you got to give credit to you got to give sort of like some credit to the fact that this thing sort of bounced up here and could potentially still come up over here to 83 or so. We've got another zone here. This is on the 4-hour. So I think sort of like the way to play this at the moment, you could say this is a slight little bit of a negative divergence maybe here as well. Here to here, here to here. Okay. But I think the sort of way to play this is that, this isn't necessarily just going to gap down. And I think actually on the weekend markets, it looks like it's actually going to gap up and out, gap up a buck or so. I mean, as I said, it's Sunday afternoon, so see what happens by the time we open Monday. But certainly, I think sort of a couple of levels that I'll be interested in will be 83.40s. And then sort of if you close above 79.80, that was that daily level that we put in there 2 seconds ago, that if you close above there, then maybe you could see some little bit of a drift up, these ones higher here. I mean, breakout level, or breakdown level, I should say, is 88, which is again that other daily level that we put up there. So even if we do sort of continue drifting up, I think this is going to be an area that's just going to get smacked on the head. You got the breakdown level, that big sort of candle that came down through there. We'll see. I mean, look, again, if you sort of say, hey, look, I think it's coming down here and it rips up over here, give it a couple of hours with this kind of volatility, it still seems like you're right. So the point is to sort of like capture it, obviously in the direction it's moving at that time. But as I said, I wouldn't be surprised. I'd be looking probably around this area to sort of see if the sellers can sort of start to come back into it. And I think certainly if we get a rejection from this level, first thing we'll be looking at is 70. But I think that second time underneath 70, obviously wick fill, but then underneath 63, then that's confirmation, then bang, we're going down even lower. But, at the moment, this could obviously still come up a little bit higher. This could be seen, as I said, as a little bit of a trap for the shorts, and they could continue moving it all the way back up over here. It's a bit of a sort of tough call with it all. But I think initially what I'll be looking for is a rejection between 80 and 83 to see if those sort of sellers can really pile on, and then sort of targeting back towards 70, and then 70 is going to be that area that I think if we can get a close underneath 70, then I think that's going to confirm that this was actually just a short squeeze, and squeeze out those early positions, and now here's the real move coming through here. And should we come down through 70, I think that's the one that you hold on to because I think it's going to start to get that next leg down. I think overall, the fact that it did bounce, bear flag, rejected from the 38%. I mean, look, you got the sellers. Which the, oh, where we are. Yeah, sellers were here, right? Sell zone, whatever. Let's make this sellers. Just to emphasize the point. Okay, that didn't work. There we go. Boom. Anyway, so the sells are here. The sells have moved down here. 38%. They're obviously keen to hammer this down, hammer this down, hammer this down. You know, if we obviously sort of come up and test this level and break through this level of sellers, well, then we know that this is just a trap because you're going to have a whole bunch of stops sitting up above here as well. But the fact that they sort of came back in at 38%, I think is probably going to hold more weight to the idea that they're going to again move down again like this. And as I said, if we see that sort of continue push down with it all, and obviously confirmed again by another lower low, I think that's, as I said, we're definitely heading into the 50s if we sort of break through these wicks at 64. So to me, I just sort of want to sort of see, you know, where do we start to see some resistance come back in? Where do these sellers start to pop back in? And are we seeing this continued push pressure down to get down underneath here? All right, so let's see, moving on. Have a quick look at gold. So gold, again, look, gold's holding up a little bit better, and obviously this bounce, you know, quite strong from this zone over here. So let me just find which chart. Again, I've got to clean these charts up. I end up with 8 charts of these things. It's all the same one. I forget which one I'm actually sort of doing these particular analysis on. There we go. Whatever. Look, let's just go with this one. Again, look, we got the same sort of thing here. It wasn't quite as strong, sorry, sort of like, you know, shallower bounce as we saw with silver. This one actually came up to, if we drag this back up to the top, around the 61%, a little bit shy of it, as you can see. But this was a sell zone that I put in when we were back down over here between, and this was more just from you know, sort of structure standpoint. So the sellers did hold where they were supposed to hold. So it was almost actually to the point of this sort of thing. And obviously then we saw this pressure coming down here, but you got to look at the idea that now potentially this thing is starting to really pick up a little bit of steam and bounce back up here. So it is holding up better than silver. I think if this does recover, I think silver is obviously probably more likely to recover as well. I think they will overall move in the same direction. I don't think we're going to get a larger divergence as in like a big breakdown in silver, but gold recovers. I think if gold recovers, silver will recover and vice versa. So I think, you know, you got to take little sort of cues from either one. But I think what we can do is clean up a few of these lines. So it's funny actually. I put a thing. I was talking to a mate. I think when we were around this point here, and I said low 74, low 74s, low 47s or 4700, and that was kind of where I wanted to see it come back down to. If you look at Friday's analysis, I said down, 4650 was the level. As you can see, this is Friday sell down from last week. So you can see that that's a little area which then they've taken out, and they've obviously bounced that back up from there. So, you know, it did kind of what I wanted it to do in the sense of sort of a little bit of a triangle coming through here. But now we've got to sort of really see, does this sell zone still hold if it comes back up here? So around that 50 to 5100 or 5000 to 5100. Or is this just going to peter out like silver? So again, you know, we got to sort of have a look at it. You know, what bits and pieces we can sort of drag out of this to sort of get an idea if one's going to go, is the other going to hold, or, you know, anyway, vice versa with it all. So we do have a little bit of a triangle. We do have a breakout of that triangle. So it does put it a little bit more on the idea that, hey, hold on, wait, this thing might recover a bit more. It looks a bit better than silver. But again, the same sort of thing. If you look at this sort of move down here, it really was just up, 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 up. And, you know, you could say, oh, well, you know, that's a recovery, but to me, these kind of things, as I said, they're just more, it's just not giving anybody a chance to sort of get off or get on, basically. It did sort of flatten out into the end, but as I said, always sort of disregard the last couple of hours. So where we can see a couple of little points we might be able to work out. So there's a little zone through here. Let's call this a zone though. Whoops. around this, so around sort of 4,900. So again, I mean, weekend markets take it with a grain of salt because these things can change so much. But I think sort of certainly down underneath these kind of little zones here, we've got a little bit of a zone here as well, lower time frame, around sort of maybe back down underneath 4,900. Obviously, 48.30, these kind of levels might give it a little bit more of a test to the downside over here. But as I said, I think sort of if silver goes, I think gold will go, vice versa, kind of thing as well. So even if this were to sort of continue up higher, I wouldn't be surprised if we do get at some stage a back test into this area here, which is kind of that breakout area. It's a bit choppy around here, but you can kind of see that this is the area of interest, or at least for me it is. Yeah, I think if you can sort of come back down in here and we see the buyers hold it, or potentially even sort of, I guess, sort of come back down to this bottom trend line down here. This is kind of area that I think will sort of be determining what happens. So you may get a bit of a gap up, that's fine, whatever. Let the market open, let it sort of find its feet, let's see what happens with it all. But I think, see, even if this thing is going to come back up and say this is a big recovery, I'd want to see a pullback into these zones, or even down here, and then a bounce up like this. Because for me, that'd sort of show that you've got buyers here. Make this buyers. Again, you have the buyers moving up. I want to see that, whether it be here or here. That kind of thing is what I want to see for this thing to sort of continue up higher. With it just sort of going up in a big V, again, it just feels like so many people short, and hold on, let's just rip it back up the other way. So I think sort of like if it is going to go higher, I mean, certainly above 5,100, there's going to be probably quite a few stops. So you could see them definitely try to sort of zap it up over here. But if this thing's actually going to recover, structurally, I'd want to sort of see a confirmation. And the confirmation would not just sort of be this grind up in one direction. It would be a structural, okay, people taking profit, and buyers pushing up into that next zone. So yeah, a pullback into say 4,800 to 4,800 to 4,850. I think that is sort of like give me a bit more confidence that hold on, wait, longs are actually the place to be, and these sort of bear flags that we're sort of seeing aren't just sort of getting these little bear market rallies along the way. Because remember, if we okay, you got to take work with me a little bit on this. Yes, it's incredibly bullish overall. That's fine. But let's just talk about this section here. This section here, you can't ignore and can't say that this is not, even if it's a temporary bear market. We're getting massive sell downs, rallies, sell down again, these kind of things, right? And so what they sort of say is the most violent rallies are in bear markets. So this thing, I mean, we saw silver went up 22%. This bounced 7.75%. So the fact that you got lower highs, that kind of stuff, I guess you got high lows here as well. But it's obviously sort of moving in this kind of downward direction here. If you get these violent rallies up like this, as I said, like the biggest rallies typically come in bear markets. So what I want to see is some actual sort of bullish structure start to form, i.e. part of the market taking profit, but that then being met by part of the market buying it up and then meeting it and then overrunning demand, overrunning supply and sort of seeing it move forward. I think that'll be sort of more of a confirmation that the move is real and that this isn't just a bear market, squeeze out the shorts rally, on with the show. So I think sort of certainly if you get a pullback down into these sort of 4,800s and the buyers step in and we start to take out a high, that's when I'll be, okay, maybe we're on for something for the longs here. But as it is at the moment, I think till you sort of take out this 5,100 and you see this sort of structure build like this, I think there's still potential that we do come down lower. As to how low, well, we're going to have to look at a couple of things. So confirmations obviously past this sort of Friday sell down lows, and that's Friday prior week. Actually, you know what? That's Friday last week. It's also Friday this week. So this is just double week Friday lows. But I think sort of underneath 46.80, a close down underneath there, then we're looking back down to these levels down under here, because that, if you get back down here as well, even though this will be like a bit of a failed breakout, that's your swing low level. So that's where you're going to start to pick up a little bit of steam on the downside there as well. All right, just writing up these notes as we as we go, so I don't sort of forget all these things. So just recapping, it really is just sort of like, look, I'll let the market open. If we see a little bit of a pullback, I want to see what happens around this zone. Break this zone, you're targeting Friday, well, double Friday lows, 46.80s. Underneath 46.80, I think that's when we sort of go down a little bit further. But yeah, it's obviously chop city around here with these sort of ones at the moment as well. All right, move along. We got Aussie. Aussie actually recovered very strongly into end of the week. So if you've been sort of watching the analysis I've been doing, I was saying, look, the idea is basically that we build a box up here. And I did have this sitting at this point here. But then I sort of, as it was coming down into it, I was like, look, I'm not sold on this. And so I moved down a little bit lower. Obviously, that proved to be the wrong point, because the initial entry was perfect. And the recovery there is bang straight up. So it's obviously moving in tow with the metals and the recovery there. So look, it does have the potential to have a little bit of upside here. But what I'm still kind of looking at for Aussie, till we see anything major change, we can put a little bit of a smaller zone in here. Break above this level, which is 70-40. Oh, wait, sorry, no, 70-30s. Then, it's a legitimate idea that we could potentially coming up to test these highs. But I think pretty much this is kind of going to be a bit of a sell zone. I don't see why necessarily we're going to break high. I mean, you could say kinda. No, I'm not completely sold on this being a flag. Look, I'll put it in, but I don't. That's not the base case. That gives you like 73 or something, I'm pretty sure. Thereabouts. What's that? Yeah, 73 and a quarter. So, yeah, I mean, that is, should you break out above here, that's where you could be going. However, I'm probably more leaning into the camp that we just see some consolidation for a little while longer, till we get something else that sort of, fundamentally kind of changes. You need to have a driver. It needs to be something where the market goes, because like obviously, look, this move here was obviously pre-positioning for a rate hike based off high inflation, strong job numbers. Okay, and we got the move from here to here. That's fine. We had the Fed sort of cutting rates. That sort of difference in sort of like divergence in central bank outlook, in the sense that RBA is between hold and hike, the Fed is between a hold and a cut. So that's why it's legitimized to move up, and why we have sort of seen this move up into these levels here. But that's priced in accordingly, of course. I did say sort of after the RBA, look for the short sides. It pulled back down here. It's found its buyers, its little zone down through here, and it's obviously moved back up here as well. So again, look, same with the metals. You could see these things continue this move a little bit. Doesn't mean it's petered out just because the week ended. But, say this moves up here and gets up to around this sort of 70s, I'll probably be looking for some short positions here. Stops just above the highs in case it does get that big breakout. But for me at the moment, I just don't think that's necessarily going to be sort of 73 as its destiny. Look, get a close above 71, and I could see it going up to 73. I think that's probably a legitimate price target for it when it does break out of there. If we have a look at this, say this were to turn out to be a bit of a range, almost sort of looks like this might be coming around that same area as well. So, I mean, that takes you up to 72, so 40 points short. But, they're two legitimate kind of price targets that you could be looking at should we break through 71. But that's, for me, again, it's not my base case. I'm pretty much looking if should we get up around this sort of 70s level to be sort of on the short side to sort of see this sort of come back down over here. Obviously, we'll be taking cues from what's happening with the metals and what's happening with, DXY, but basically US dollar on a sort of broader sort of sense. I don't think this is kind of necessarily sort of right to sort of short and hold to be coming back down over here. As I said, I think the fundamentals means that you should be staying up around here, but it doesn't mean that you can't play the zone. So as in, obviously, we could see strong buyer demand from the 69 cent zone But equally, I think sort of unless it sort of like clearly breaks through 71, there's a good chance that a revisit up over here is just going to see the sellers and profit takers come back in again and get a little bit of a short side move coming down through here. So I think sort of come Monday, look, short term confirmation above 70.40, but I think that's really targeting high 70s, like high 70 cents, I should say. So not high 70s like 79 cents, high 70s, so 70, 80, 70, 90, that kind of thing, for sellers to then to sort of move back in and sort of continue this kind of range moving it through here. All right, moving on, and we have DXY. So DXY, look, it got the sort of breakout on the kind of, which one were we using again? Going through 8 different charts for this sort of stuff. Got the little breakout here, and as you can see, it's funny because with these kind of moves, right, like this is a little flag. I obviously put this as the post, a poll, whatever, flag, boom, price target hit pretty much spot on. Actually, it is literally spot on, and the market sold it back down. So you could say, okay, well, that legitimately saw a little bit of profit taking on there. I've also seen people that sort of used a bit more of the poll and sort of said that that was their kind of point that they thought it was going to. And look, I could still see some upside here. I said mid 98s is where I've kind of targeted this thing at. I think sort of certainly if you take out 97.70, that's probably a legitimate target for it there. But as we sort of saw, it kind of really played out as it should just there. It's come back into and sort of so stopped a little bit out of zone through here. Let's make this a little zone. Whoops, bubble zone. Make it just a normal zone. So, I think this could sort of like really be a bit of an idea of, okay, is this thing rolling over now or what's happening with it? So let's just put a few alerts on the stuff. I think I should run out of alerts. This is the thing for 50 different alerts on every chart. So put it just under here and let's say rolling over. And if we're moving with this, then we're really going to sort of be targeting back to, we call it 97. Targeting 97. So should this thing open up and still have a little bit of a pushback down here, this is the area that I'm kind of interested in, this support. I think if you break underneath 97, then you could say, hey, that's it, and this is rolling back. Doesn't mean that the game's over, but it just sort of means that this leg here is now coming back into, potentially down to the 96s, which is a high time frame support zone. And this is where we're getting our third leg of things, where basically, this is what you're looking at, that you sort of like coming down, you find support, find resistance, then you're entering into this leg through here. So the question at the moment is this bounce leg here, this second, whoops, not that one, this bounce leg, this second leg here, is this done? This is what we're trying to ascertain here. And I think if you break 97, then you can say, yes, that was the high of the bounce, this is the move, and then we're entering into the third leg, which is going to give us high, low, double bottom, or lower, low, game's over. I'm in the camp that we'll get the buyers will step up from this level down here. If you break 95, the game's over for the dollar. If the buyers come in and they pick it up around the sort of 96.50 area, we'll go on to the other chart, emphasizes this point. If we see this move here and the buyers come back in, then I think that's sort of like, okay, we could be seeing, a bit more of dollar recovery story over the next couple of weeks and that, a month or so. I think that sort of like we could be in for, as I said, more downside on the metals and Aussie should this sort of come and play out, because that's what we want to see, the structure of the buyers actually stepping up from down here. So there's a lot of work to be sort of done with this thing. Let's get back onto whatever other chart we were using. Is to sort of see, is this move done here? If we see this, hold this little zone here and take out 97.70, then we're still in this move here, which means that that is still the play. So what I'm kind of getting to with this is we got to sort of work out, is this the end of the dollar bounce from this bounce through here? So this will be the zone up over here, but there will be the two levels whoops, let's just move this out of the way. There'll be the two levels that I'm kind of looking at, below 97 or above 97.70. All right, just have to, again, get those notes sort of up to date. So I think they're the kind of two levels that I'll be looking at for, whoops, if I can click this one, here and here for direction. As to sort of say, is this move down here, or are we going to come a little bit higher? As I said, I'm still in the camp that we probably will get a move up here. So lower time frame, well, lower time frame, whatever. I think that'll be the play, which actually sort of will continue this bounce, as you can see. But then around those sort of mid 98s, that's really where I'm going to be saying, hey, look, I think this is a good area to start selling the dollar again into this sell zone up here, and then sort of look for that larger time frame, because that's on the 4 hour. That's the kind of move that I'm kind of looking at, that we could sort of start to see. And as I said, if we do get this play out and we do get this sort of smaller move up through here, and we turn around and just go out the top here. Oops, where's that RSI gone? If we see this sort of pop out to the top here into that sell zone, I do think we will have a period before going much higher, if we are going to go higher. But I think that's the sort of structure that we need to see. But the question at the moment is, this second wave here, is this played out? Where it did, it actually bounced from the 61%, I'm pretty sure, if we have a look at this exactly. Yeah, look at that, right on the 61%. So again, look, if we move up above here, I'm really going to be looking around this kind of area at this 98, which is the 78%. We got a little bit of resistance up over here as it set up on the way down. I think that'll really sort of be the time to sort of maybe start to sell dollars. And then sort of see what happens through this leg. This will be the very crucial leg. So if we do get the reaction from up here and we start to see a continued sell down over here, it may be a couple of days or a session or a week or so, but that'll be when we're really sort of paying attention to where the buyers go. If it comes back down here, well, then you could be seeing a bigger move all the way down here. But again, when we use these, Fibonacci, and we look at these moves here, the higher that the bounces come, the more question there is in continuation. As in, when we come from the 38%, it's a higher pressure that the market's going to push it, get down. I want to get out no matter what. I want to sell it. Oh, this is the best we'll get, 38%. Let's go, bang, and push down higher. Once it's starting to get up into these 78% and 61% retracements, all of a sudden, continuation's not looking as easy a task. More likely, you're looking at either potentially a higher low or a double bottom. So I think the fact that it's up at the 61 and with potential to go to the 78 makes me question whether this whole sort of dollar completely over story is really about to happen. To me, I'm more in the idea that we see this and we see the buyers progress up and then sort of push out to the top side there. Lastly, just have a look at Aussie Yen, which I haven't covered a lot, but this thing is absolutely on a rip. Obviously, look, Aussie's got all this stuff happening to it. It's just pulled away from this trend line. I really thought we'd get a pullback down to over here, but it's not. It's just accelerating. And where are we at here in terms of highs? Look, we took out the intervention levels, smashed through that, 110.20 or whatever. Through that level there. Wow, look at this. We've cleared all these levels. I mean, we're back to 1991 levels. Now we're back to 1990 levels. Where could it stop? Look, that's a bit of an open-ended question with this sort of thing, but 114 kind of looks like, just based off this kind of thing here, for all intents and purposes and shit, it's actually kind of open air trading in that, because we're talking sort of, 35, 36 years since it's been back at this level. But if we sort of just do a bit of a, couple of little marks here to sort of say where maybe it might sort of come to, they're kind of levels that I'm looking at, 114 to 116. Where are we? Can't even get back to where we were. Whoop. Flying back over here. Wow. I mean, look at this thing. It doesn't really get much more overbought than this. That is just a complete rip up to the top side there. But the fact that it's cleared here, you got to sort of think, okay, the sell, they're holding it. Well, there's no more sellers, hence the price is pushed through. Unless the BOJ do something, I don't see why this thing is necessarily about to turn around. Fundamentally, Aussie's strong. We've got the job numbers, we've got the hikes from the central bank, We got the job numbers weak. We got inflation going up. So there's every reason for Aussie to continue going. I'd be cautious about buying the highs like this, but certainly if we get, I mean, that's on a weekly. But look at that. And it's funny because I think on the Friday I said, be wary of these candles that close right on the end. Look at this here, boom, reversal. Here, boom, close right on its lows. We've got a little zone through there. Must be a 4 hour zone or something. Why do I have that marked out? Yeah, got a 4 hour zone through here. This thing, bang, close. But, obviously, yeah, we got continuation here. We got continuation there. But that just went boom and then turned around. So anyway, look, long story short, this is looking bullish. It looks like it wants to go higher. Um, Weekly timeframes are up around that 114, 116 levels. So, I'd be cautious because obviously, we're past that level of intervention where, the BOG sort of acted, 2 years ago or something now. Quick look at just what UJ's doing. UJ, as you can see, this is a testament to how strong the Aussie is at the moment because you can see UJ actually sort of bounced on this weekly falling resistance, actually worked very well, but it's not quite back up to its highs here yet, whereas Aussie's equivalent to like up over here. So, should this thing come back up to that 160? 160 is the kind of level where everybody starts to get a little bit itchy about sort of are the BOJ going to intervene? Hence, like this little sell down with the idea that maybe they would. Nobody pulled the trigger, nothing happened. Okay, put the positions back on. Boom, boom, boom. So move up like this. So again, with these little things, maybe we see a little bit of a move up here and see how this all kind of sort of flows together. I still think we potentially have a little bit of short-term upside in US dollar strength. Maybe you get around these 159 areas again, while DXY gets around that mid 98s. Then we see a sell-off. See how it kind of can work in tow with it all at the same time? That's that cross-chart confluence. Look, this could fail from here and come back down here. We'll have to sort of wait and see what happens through this week. But I wouldn't be surprised if we do see a little bit of US dollar strength, a little bit more before we do actually see that sort of sell down there. But if we jump on to, where's it going? AJ, back onto what we're actually looking at here. Look, I think sort of potentially, as long as this sort of holds out the top over here, so if it holds above 108, 108.50 for a period, I think wherever the high is in this move, that's going to be a big confirmation line. So if we see a bit of sort of, two-way price action up here, so if we see something along the lines like this, then potentially what you do is you put your, well, not you put your entry, but like, you look for whatever the high may be like this here, and then that'll be confirmation that this thing's moving up. But certainly the longer it holds out the top over here, above sort of say 108.50, the higher chance that we are going to get that sort of continuation and a big break higher. So I think wait for where this sort of shows, top end of this breakout move, whether this be here, whether it be up here, whatever, wherever that is, wait for a bit of consolidation. And then should we break through that, I think 114 is probably the next level, which is just crazy, crazy. I mean, it was, what was it, 75? What did we get down to? 85 in April. So yeah, it's crazy. I mean, they've got that new governor, or it's governor, whoever it is, the lady over in Japan, who's very heavy on the idea of more government spending and that, which is basically sort of like going to add to a weakening yen. So I think that's sort of something to keep an eye on there for it at the moment. All right. Actually, just before I do end up, let's have a look what we have in terms of data. We did have the government shutdown this week, but that only lasted about 24 hours. But at the same time, it was enough to serve, so we didn't get any of the NFP or anything like that. So what have we got? Not really much between Monday, Tuesday, business confidence, blah, blah, blah. We've got retail sales out of the US, a little bit weaker on these ones here. Again, all these things with the stars are delayed 2017 government shutdowns. Still filtering that out. It'll be interesting when we get that back on normal. We got sort of non-farm employment change. So are we getting this or not? Delayed 5 days. So again, at this stage, it looks like we're getting it. So it should have been last Friday. Now, for some reason, they've decided to put it on Wednesday night. Okay, whichever, whatever. 70,000. It's pretty weak numbers, though, isn't it? It's kind of all over the shop in that, but yeah, it's looking like a positive number here. Unemployment rate flat, 4.4%, which again bouncing around a little bit, but has been up to 4.6, so it's holding around that 4.4 area kind of thing. So not spectacular, but not I think the best thing for job numbers out of the US is to not be shocking. If it's not shocking, it's a positive. So even though these are kind of weak numbers, it's just as long as it's not like a negative number. Unemployment claims, they sort of ticked up a little bit, 230. We were hanging around the low twos for a while there. So that's a big jump up there. That must have been what was caused a little bit of a sell down. Maybe I missed those ones last week. And apart from that, then we got CPI, 12.30 on the Friday. 2 days by government shutdown. Jesus, these shutdowns are just ridiculous at that. But yeah, 12.30 on Friday night. That'll be a fun one to finish the week. But look, CPI is looking to come back down. So, and this is why sort of we're seeing a difference between, Aussie and US sort of outlooks from the central banks, because where Aussie RBA, we've got accelerating inflation, which is moving up. Whereas like, not only are these guys not accelerating up, they're actually looking to cool off. And of course, the reactions from what the market perceives as the course of action is completely opposite. So, that's why Aussie could definitely still stay bid, sort of like, for the time being. So I wouldn't be looking for long-term hold shorts on Aussie. But as I said, back with the chart, I think there's a good chance for a bit of a range play. All right, that's it from me.